Yesterday we caught this move. It's a big move, and we have caught bigger moves. These are the examples here. And in this video, I am going to show you how we catch these moves. If you're new to the channel, subscribe. I have a free mentorship program. Link will be in the description. Let's jump into the video. So step number one is I identify the high and the low of the week. So the high and the low of the week is set on Monday. That is the first day of the week. So let's look at what happened on the Aussie dollar yesterday. So yesterday was Monday, and it set the high and the low of the week. Now, the setup we got occurred in the New York session. So we will mainly focus on what happened in the New York session. So step number one is identify our timing window. Our timing window begins from 8 to 11 a.m. New York time. Keep in mind that daylight saving has, we are back 1 hour. So keep that in mind. Now, once we have the high and the low of the week and the timing window, step number 3 is letting the first hour set the high and the low of the session, which means in our case, we broke out. So once we break out in the first hour, what we do is we extend our low to this level. So this becomes the new low of the day, low of the week. Now, remember, this is where we have the money, below the low. This is where we have a lot of liquidity. So we wait for the second hour to come back to this level. So in that case, it would be something like this. First hour sets the low of the session, low of the day, low of the week. And then we wait for price to come back again. And so in our case, price came back and broke out. That is what we want to see. The breakout. When it comes, we want to see the breakout. If it pins, all we do is extend the low. But if it breaks out, then it screams, look at me. Once we have the breakout, then we look for a very specific pattern, which is the 1, 2, 3. 1, 2, 3. This is number 1, the move down. The number 1. This number 2 has to be 2 or more consecutive candles. So as you can see, we have 1, 2, 3 consecutive candles, and then the breakout. So 1, 2, 3, boom. The next candle is our entry. This is our entry. Our stops a few pips, preferably 3 to 5 pips below the low. And then we are targeting the high of the day. Now, when I came into the markets today in the Asian session, I got out at this level because it has taken too much time to hit TP. Usually, the trade setups don't roll over into the next day. As you can see, price hits TP in the same day, in the same session. So that is why I closed the trade. Now, to be honest, not all setups will give you these big moves. For example, in the Asian session, we had this trade setup. So we had a failed breakout on Friday, which is a signal to sell. So we sell on Monday and we sell on Tuesday as day 3 sells. Now, if we look at the process, this was in the Asian session. We have the high, we have the low, we have the breakout, and then we have the 1, 2, 3. This was the entry. So this candle here is the entry. And you can see we got stopped out. So point being, we ran the maths. So on average, this strategy has a 50% win rate. And say for example, you have 20 trades, meaning you have minus 10 R at the end of your 20 trades, and your winners are on average 3 to 5 R. So let's call it 3 R. And so you have 30 R in your winners. So point being, it's all about the math. If the math makes sense, then just stick to the math. And that's what I do. And if you're interested in learning more, check out the free mentorship program. And I will see you in the next video. Peace out.